I guess I will say that, you and I know each other personally through my wife. And, one of the things I love about Rachel, there's many things to love. One of the things particularly, I think we are values aligned. We both really want to help people. And, that's kind of why we work together. And work well together. Right?
Yeah. Absolutely. Thank you. I appreciate that introduction, Paul. Really great framework for what the opportunity really is for home buyers. And it's a perfect segue to kind of what I'm going to be talking about. So yes, the opportunities are real out there. And what I really wanted to kind of hone in on is reiterate some of the aspects of why now. But at the same point, some of the people out there are facing challenges, real challenges. And let's talk about those challenges. And then how can the assisted purchase program help buyers overcome some of those challenges? And if you do nothing, if you sit on the sidelines, there might be a cost to it. So we can actually quantify it and talk about what someone can lose out on if they sit on the sidelines. And of course, Paul and I will then stay on the line for some live Q&A. So there was a report at the end of March that basically RBC put out saying that we are taking temporary hit to our housing market. But there's some good news in that as well, because when one door closes for some, a door opens for others. And basically what the report said is that we expect property values to fall briefly, and surging unemployment and the market's illiquidity will compare a growing number of tight squeezed sellers to make price concessions. What that really means is very similar to what Paul was saying. We are going to see buyers or sellers that need to sell, based on their personal circumstances, and they recognize that they might need to reduce the selling price just a little bit in order to sell during the current conditions of COVID. And those buyers that are in the market are going to be on the receiving end of those opportunities. And there are going to be massive opportunities. So if you've been sitting on the sidelines and you're not sure, well, the opportunity is knocking, and there are different indicators. There was a survey that was published again end of March that said 24% of Canadians are actively looking for cheaper homes amid COVID-19 crisis. So that directly supports what the RBC report is saying, is that there are people recognizing that right now there's going to be some price drops. Maybe not all of them have hit the market just yet, but in the next 3 to 6 months, we might be seeing a nice opportunity. So 24% of the people are actually already house hunting for that. And of course, we're doing it differently. We're not doing it the same way. 48% of the Canadians house hunting are looking at homes through different online tools and platforms and virtual tours. Now, granted, 1 in 5 Canadians will begin looking for homes again after COVID. So when is the best time to hit the market? It's not when everybody else is going into the market, it's before that. So now, obviously, 4 in 5 people are staying put. Great opportunities could be coming up from that because sellers won't have as many buyers in the market. Now, 31% are planning to go and buy a home within the next 6 months. That's going to create quite a surge in the marketplace, and supply and demand is always going to be a challenge. We had inventory issues before the COVID crisis hit. Now we're pausing, not because the demand isn't there, but because we have to pause given the situation, and only the urgent situations are the ones that are persisting. So because of this pause, we are still not solving the supply and demand issue. Or if we had inventory issues before, we might still continue to have those inventory issues. And when 31% of the market starts jumping into opportunities, it's going to squeeze the market and prices will go up, and it'll give the sellers an upper hand. And 26% of the people are looking to buy in the next 12 months. So again, the supply and demand thing will continue to be the norm as things ease off after COVID. The reality is, when people do go house hunting, whether it's now to try to get some opportunities, whether it's after COVID subsides and we're able to start being out there, people are going to come across some challenges. There's gatekeepers, the banks. Already, we've seen hundreds of thousands of Canadians getting declined for mortgages. And that's because the banks are looking for all the pieces to fit together perfectly, especially now. Banks are a lot more risk averse than they were before. So now they're going to be even more, more determined to find borrowers that are risk proof. So they're going to be looking for at least a 5% down payment from people who have perfect credit and have the perfect job. And perfect credit can be anything of 680 or better. So if 5% and 680 score doesn't actually work together for every home buyer out there, they are going to be struggling. They're going to have some challenges. And usually the people that are affected the most are the ones that are starting new jobs, are carrying some student loans, have maybe some car loans, and those that don't have any credit, maybe they just didn't believe in owning credit cards. Some people are going to fall behind on payments. We've seen this before. I mean, COVID is not the cause of this. There are people even before COVID that have been impacted by divorce or some sort of a death in the family or an illness where they had to fall behind on their payments. And in some cases, the fallback is very severe and they have to file for a consumer proposal or a bankruptcy to get out from under that debt. So those people will not have a credit score of 680 or better. They're going to have a stain for 7 years on their credit report. And it makes it very difficult for them to get into ownership, especially with a 5% down payment. Now, the self-employed sector, I'm self-employed. There's nearly 3 million people in Canada who are self-employed. And the banks like RBC, Scotia, National Bank say, we'll help the self-employed entrepreneur, but we want a 10% down payment, plus. We want them to prove that they have financial strength. They have to, of course, show recent notices of assessment. The notices of assessment have to show significant income, and then, of course, taxes have to be up to date. And last but not least, self-employed people still have to pass the stress test and have to have good credit to be able to get into a mortgage with 10% down. So the 5% rule doesn't apply to the self-employed people. And the Globe and Mail wrote a story about this saying, as mortgage qualification gets tighter, self-employed buyers have to turn to private lenders. But you still have to have a track record of income. And the reality is going to a private lender is doable. However, it's going to come with a significant cost. Newcomers to Canada come here with the intention to purchase. However, they to qualify for a mortgage with the bank, they need to have at least 2 credit cards for 2 years with a $2,000 limit. So this is the rule of 222. And they might not need to sit on the sidelines because through our program, we can actually help them fast track and get into ownership earlier. And then there's the, what Paul was saying, how some people have purchased pre-construction. Now, pre-construction opportunities are abundant. If you can qualify for a mortgage with 5% down, you might be able to scoop up a great assignment deal. And now is definitely a great time to be looking for those types of opportunities just to get your foot in the door, even with a condo, because they tend to be a little bit more affordable. But what happens if you are declined for a mortgage if you purchased a pre-construction condo? So if someone purchased a pre-construction condo 2 or 3 years ago, and it's coming up for occupancy in the next 3 to 6 months, and they realize that their financial situation has changed. Maybe they depleted some of the savings for their closing costs. Maybe their credit took a little bit of a hit, and they're not going to be able to close on that mortgage. So what happens in that case is that the builder will want to keep the down payment that that purchaser had put in over that timeline that Paul demonstrated. And that can be a massive amount of money lost. So what we do through our program is we help those buyers recoup that investment by putting them into an assisted purchase program. So we assist them in getting that closing done if they get declined for a mortgage on a pre-construction. Our assisted purchase program helps buyers that have a limited down payment or imperfect credit or a combination of the two. The buyers can go house hunting to pick a home that they own, or we can assist with a pre-construction condo that they can't close on, or maybe a purchase that they waived financing conditions on, and in the 11th hour the bank pulls back the approval and says you can't get the approval. We can swoop in and assist in that situation as well. Most buyers that go through the assisted purchase program can complete the process within 24 months, 36 months, or 48 months. On average, it's about 36 months. And in the process, and this is the best part, through the assisted purchase program, buyers that are in our program are still earning equity. So it's not like they're sitting on the sidelines renting, trying to save up a bigger down payment and fix their credit. They are actually in the program generating equity the same way they would if they got a traditional mortgage approval. Now, this is not done at an institutional level. What this really is a group of families helping families. My husband and I created this network of families about 10 years ago, and we have a network of about 150 families who really care about helping other families get into home ownership. So we're not institutional, we're not banks, we're not, a conglomerate organization. We're really just everyday mothers and fathers with kids who really want to help other families overcome the barriers that Ontario families are facing to get into home ownership, especially now, especially post-COVID. We feel that there's even more reason for people to want a stable roof over their head and a comfortable, safe environment for their families. And these families are more dedicated than ever. And that's really where the assisted purchase program comes from. The assistance comes from other families helping families get into ownership. And families of all types. Here's an example of Callistus and Damien. Now, Callistus works for BMO. He works in a great job and he makes a great income. But the problem is he went through a divorce. And because of matrimonial debt, Callistus had to file for bankruptcy to get out from under that debt. Meanwhile, he was also putting his son Damien through university. And when his son came out of university, he had some student loans. And of course, Callistus had some debt that he had to pay off as well. So in the process, Callistus was saving up a bit of a down payment. He came up with $20,000 savings. And when he went to the bank, of course, he couldn't qualify for a mortgage with $20,000 down because of the stain that is on his credit report from the bankruptcy. And because Damien couldn't really use his new job income because he just started a new job also at BMO. He's actually a forensic analyst, analyzing fraud. Very interesting profession. Making great income. Combined, the two of them bring in $124,000 a year, and they really were committed to owning because they were renting a condo actually, and they were feeling that they want more space because Damien obviously has a social life, has a personal life, and just in a condo, a father and dad were, as you can imagine, kind of stepping on each other's toes. So they thought, okay, well, why don't we put our income together and maybe see if we can buy something bigger. Now, it might not be in the downtown core of Toronto, and they were willing to move further out because both of them have the potential of spending more time working from home. And now with COVID actually in the mix, more and more people have demonstrated that a work from home setup is very, very acceptable by a lot of employers. So Callistus and Damien were already working from home on a few days of the week, but now they can obviously work from home more. So they decided that they want a bigger home and they're going to move further out of the area because their budget supported only an entry-level price point. So they did their research and they wanted to live in a community near water. They couldn't be downtown by Lake Ontario and Harbourfront, but they chose Midland because Midland was close to the water, still a very lovely harbor, beautiful community. And they found a starter home with a built-in man cave. So you can see there's a theater downstairs that resonated with Damien, and they purchased this house through our assisted purchase program. Now, what's happening behind the scenes? Because they couldn't qualify for a mortgage, we need to assist them in getting mortgage ready. So behind the scenes, what they're doing is getting the time they need and the guidance and the framework to fix some of the credit blemishes that are holding them back. They are also building up a bigger down payment. So they had $20,000 to begin with, but that's not going to be enough 3 years from now when they go to qualify for a mortgage, or 4 years from now when they go to qualify for a mortgage. So they need to build up an additional down payment through their monthly payments. So it's kind of like a forced savings that people would do on their own anyway. But in the background, the benefit of doing it through the assisted purchase program is that they can build equity. So as they maintain the property, as they make it their own, as they add some improvements to the property, for example, pulling out the carpet, putting in a nice hardwood floor in just 1 or 2 of the rooms, boosts the equity in that property. In a normal rental, that equity would stay with the landlord. In an assisted purchase program, they're actually benefiting from that at the end. And ultimately, they have a sense of stability and peace of mind that they are in a home of their own. Now, that was Callistus's and Damien's situation. I want to just briefly share an example of another couple that came to us that was looking at buying a condo downtown, and they had a budget of about $500,000. But again, with the whole COVID thing, they realized that a condo has very limited space for them to be able to work from home together. So they're in essential services, they're both in technology, they're both in IT, so they're still both working and of course working from home. But condos for $500,000 were not affording them a lot of space. So they decided to go beyond. And Brampton presented a really affordable opportunity for them for a townhouse. It's 3 bedrooms. It has a finished basement, upstairs, main floor, and a basement. Lots of space for this couple to set up their different individual work from home areas. And as they grow and plan to have children, they have room for that. They have a backyard and extra bedrooms as well. So one of the common questions I get is, what will my monthly payments be? Will they be more than if I were to go to a bank and qualify for a bank mortgage? And I just wanted to give you a quick example so that for that couple that I was talking about that is looking at that Brampton townhouse, we actually pulled together a comparison. So we basically said, if you were to buy this property, which is listed for $519,900, and this is a true story, this property is still on the market. If you're looking at this property for $519,900, you would need to have a 5% down payment. With the banks, it would be about $25,995, and for the assisted purchase program, so exactly the same amount. Now, with the banks, you would need to have excellent or very good credit. Now, the challenge with this couple is that one of them has been in a previous relationship before, and the credit is just a little bit tarnished because there were some collection items from the previous relationship that didn't get resolved, and that is stopping them from having excellent or very good credit. But in the assisted purchase program, average or no credit actually is okay, because the whole point of the assisted purchase program is to figure out, how do we improve that credit situation? What do we need to do to get that credit to be excellent and to be very good? And that's why it can take 24 months or 36 months, or in some cases it can take 48 months. But regardless, we'll create a framework and we'll get the buyers there so that they can qualify for a bank mortgage at the end of this assisted purchase program. So the main difference is that in the assisted purchase program, like I was saying, we need to build up a bigger down payment. So that $25,000 that they are coming in with today is probably not going to be enough to get a bank mortgage at the end of the assisted purchase program. So we have a provision for a down payment credit. So every month, about $551 is added to the monthly payment. It's rinse and repeat, it's consistent, it's automatic, and more importantly, the affordability has already been established, so they can afford it. They would have to do this anyway if they were renting. The assisted purchase program just makes it more automated and more streamlined. Now, when you factor in the down payment credit, the monthly payment on an assisted purchase program property versus the bank monthly payment is virtually the same. If you had a bank mortgage with 5% down, $2,726 is what that property would carry for. And that takes into account mortgage, property taxes, and insurance. Through the assisted purchase program, the monthly payment is $2,813, which is not far off, and that already includes $551 of forced savings, which is essentially money back in their pocket. So technically, they're paying less in rent through the assisted monthly purchase process and getting further ahead rather than sitting on the sidelines and fixing the situation on their own. And the main difference, aside from the monthly payments being pretty much on par, the key difference is the cash to close. So if a buyer doesn't have the cash to close with a bank, which in this case would be $35,470, if they don't have the closing costs, they are going to be forced to sit on the sidelines. But the assisted purchase program requires about $26,995 to close. So nearly $10,000 less to get in through the assisted purchase program and pretty much pay almost the same as they would be paying through the banks. So this is what we showed the couple, and we do this kind of a layout for everybody who is coming into our program, and we give them a guideline and a comparison. If someone has 5% in perfect credit and they can have the cash to close, they should always go the bank route. But if they can't, the assisted purchase program is an excellent option. We have helped about 350 home buyers go through the assisted purchase program across Ontario, and that number is continuing to grow. But we lead with education, and like, this is not a sales pitch, and this is really not designed to make you any offers in any of the property information I'm sharing, or just examples based on what other people are going through. What I want to encourage everyone to do is start with education. We wrote a book a few years ago. It's called The Rent-to-Own Essential Guide for Home Buyers, because the assisted purchase program essentially is a way of renting to own a property. That's how you get onto that property ladder. You have to start somewhere. And if you're working only with $26,000, that's enough to get started on a $520,000 property today. And whether you start with a condo or you move further out and start with a starter home, the opportunity is ripe now, because you probably will get more bang for your buck. And if you want to know the nitty-gritty of how it works, all the opportunities and the pitfalls, the book is a great place, and it's available on Amazon.ca. Just search the Rent-to-Own Essential Guide for Home Buyers. Now, time is money. If you continue to rent, there's a real tangible loss financially, potentially looming, and I'm going to quantify it for you. So here's an example of a semi-detached house that was purchased through our program 4 years ago. A young couple, they're actually both paramedics, so they're still working in their essential services. They just got married, they're newlyweds, they really wanted to get into home ownership, and they borrowed some money from mom and dad, and they got into our rent-to-own process. And the assisted purchase program required that they have the affordability. And the affordability really comes from a combined household income. So at the time, they were just starting out, and their combined household income was $110,000. I believe she was making 55 and he was at about 60, 65. And since then, of course, they've had pay increases, but that was what they were starting out with. And that was enough for them to get a $520,000 semi-detached property. Now, let's fast forward and see what happens at the end when they completed the assisted purchase program and went to qualify for their mortgage. So again, they started at $520,000, and in 2017, that property was now worth $543,000 through the assisted purchase program, which is basically a 4.5% annual appreciation. Paul was talking about appreciations being around 6% on a conservative note. Well, we're below the conservative. And this is what they would be paying if they exited in 2017. Now, if they exited in 2018, they'd be buying that house for $567,000. And of course, they were slated to finish their assisted purchase program in 2019, and they were buying the house for $593,292. Again, 4.5% annualized appreciation based on the $520,000 entry-level price point. Now let's compare that to what's happening in the market. The market was appreciating on average for year over year at about 8%. So when you actually do the calculation, the assisted purchase program saved these buyers about $61,000. In essence, they were buying this property below market value by about $61,000. Or the other way to look at it is that they had $61,000 of built-in equity in that property. This is through the assisted purchase program. So if they were renting, they would never have access to that kind of appreciation. But through this program, that's how they get further ahead on a very basic entry-level price point. And that is still realistic today, even post-COVID. We're still going, even if the market goes to 6%, as Paul was saying, we don't have a crystal ball, but even people in our program that are going through it are going to be buying their properties at a 4.5% appreciation. And if the market is kind of getting down to 6%, they are still further ahead and they still have equity. So the next thing to consider is, what's your budget? And the first question is, what preferred area are you looking in? Are you looking downtown Toronto? Or are you willing to go a little bit further east, a little bit further west, or a little bit further north? Because your budget will go further if you expand your preferred areas. Then we have to take into account what's your household income. If you're a couple, what does he make? What does she make? What other credits do you make? Do you get child benefits? Do you get any ODSP income, spousal support? There's a whole bunch of other contributors to your household income. So make sure you understand what household income you're dealing with. And in reality, to qualify for the assisted purchase program, you need to have anywhere from 4% to 5% down. In some cases, 4% is absolutely enough to get your foot in the door. And the next opportunity is really just to connect with Stephanie. She is the assisted purchase program consult, and she will basically take a call with you and walk you through and answer some of your specific questions, how it works, how it may apply to you, or how it may not apply to you. This program is not for everyone. Not everyone can qualify for it, but we're here to answer all of your questions. So all you have to do is reach out, info@rethinkrenting.com, and connect with Stephanie, and she will set up a call, no obligation, free of charge. And by the way, the assisted purchase program has no cost to it. This is an absolutely free service that the families wanted to extend to people that are going through this process. So I'm happy to take some questions and learn a little bit more of what people are thinking.